Welcome back, Alpha Hunters. Hope everybody had a great week. The markets are closed for week of August the 18th. And oh boy, did we see some selling this week. But is the market in no man's land? Well, it is starting to be that way. And we'll take a look at that a little bit later. Starting off the week though, had a nice little gap down coming in on Monday, and then we got bought up very strong, sideways for a few hours there on Monday, and then pushed a little bit higher to end out the day at the highs basically on the day. And if you want to know what was really strong on Monday, go look at semiconductors and go look at Nvidia. They were all strong, and I mean really strong. But with the way that we ended on Monday, what you didn't want to see on the market was a gap down, especially a somewhat significant one where you gapped right below these lows, the intraday lows that we had in the afternoon, midday on Monday. And we did exactly that on Tuesday. Gap down, flushed, first 45 minutes. That was kind of brutal. And you see this little sideways action here that we had for a few hours on Tuesday where we just kind of went sideways, but we just had lower highs coming in. And then right there in the last hour, just kind of flushed down and broke down there. So yep, just kind of set up the tone there for the rest of the week. As then Wednesday didn't really gap too much, but traded a little bit higher, went sideways for about an hour and a half, and then just kind of rolled over the rest of the day. And I wasn't on the live stream on Wednesday, had some prior things kind of going on, but we definitely did see the market roll over. Got the FOMC minutes on Wednesday. Nothing crazy, that we already didn't kind of know about or kind of speculate. Kind of got a little squirrely there when we got the FOMC minutes. Initially sold off, bounced, took out the pre-FOMC minute kind of announcement high, and then it just rolled over last hour and a half. It just got crushed. So basically just ended on the lows, basically back-to-back days there. Yeah, not exactly feeling good. And then we go into Thursday, nice little gap up, and you kind of wondered if, we're going to see a little bit of a rally here. Well, we didn't really get any of that, and we just kind of slowly chopped lower for the first couple of hours, and then we had a little rally here in the midday, but it wasn't really much of anything. It was kind of just more like a little midday pause from the selling, and then we just rolled over. We rolled over pretty hard there on Thursday, especially in that last hour and a half or so. It got kind of strong on the selling side, and we basically ended on the lows again. So that was like 3 days in a row. We were seeing the lows there within the last 30 minutes or so, 45 minutes. So yeah, not exactly the best sign from the market the middle part of the week here. And then we come out Friday morning, nice little gap down, traded higher, initially got bought up. It was just an easy, close your bearish positions on the open on this gap down. It was a pretty large gap down, one of the larger ones we've seen here in a while, especially one that we've seen where we've seen multiple days down in a row and then a gap down. We haven't seen that in a while in the market. So a lot of people just locking in profits if they've been bearish. Also starting to come into this 430 SPY zone. So it also made sense that we saw some buying there. And then we just kind of traded higher, went sideways around the neutral line for the day. Nice, tried to rally towards the end of the day, and then the last 10 minutes just kind of popped back down. So that last 15 minutes was kind of all over the place there. We did continue to have earnings this week, but nothing I'm going to really focus on here in this video. We got the Federal Reserve balance sheet data out Thursday after the bell. It did tick higher another week in a row. That's 5 of the last 6 where it's actually gone up. We did have a somewhat of a pretty good drop a few weeks back, but it has gone higher 5 of the last 6 weeks. But it's kind of just flattening out here. We have seen periods of this where they have gone flat before, like we did back in January, February. Even back in 2022, we saw some periods of time where the Fed was just not doing a whole lot as far as changing the balance sheet. So, I mean, it happens. It's not a big deal. All right, the VIX. Well, the VIX did finally start taking some of the sell-off a little bit more seriously, especially on Tuesday. Tuesday was a very important day as we got the gap down from the very strong end of day on Monday, and we continued to sell down. So yeah, Tuesday we saw a lot of things start to get respected in the market, especially some of the sell-off, because we haven't really seen the market bounce at all over multiple days and start to have that curl up and try to continue a rally and push higher. So people started to really respect the market selling off. But yeah, we saw the VIX break the 17. This is the first time on a weekly time frame we're actually holding over 17, going back for a few months now. So all the way back to, looks like May the 26th here. So, oh no, my apologies. We actually held over it here on August the 4th. Although, we just ended over on August the 4th. That was the week we got the credit downgrade from Finch on the U.S. long-term debt. So, okay, maybe. But, it hasn't happened much here over the past few months. But the VIX did come right into that 200 200 daily moving average. So you know what, a little bit of a rest there. Obviously the market is also resting from selling off, but are we going to bounce here on the market? Yeah, we'll see. The DXY, the dollar index, and oh man, I have been telling you, watch out, watch out, watch out on this. It's saying has just been continuing to grind higher, and it all comes back to this day, back on July 27th. This was the day that you had to respect any kind of bullish move coming, because this was, should have been the rollover, and then it immediately just got bought up, took out the previous kind of retest, and it has continued to push higher. It's just kind of slowly grinding through that 200. Also, these double tops, it has taken out these double top highs that it had kind of right there at the end of June, beginning of July, and it is breaching through those. It hasn't held it. It hasn't held it, but it is getting through that 200 daily. Also going to have the 10 and 20 coming up here. So it's just slowly grinding through, and then once it gets a really strong pop through, we'll see some probably really good pain on the market whenever that starts to happen. The GLD gold trust here, dollar keeps grinding higher, gold keeps grinding lower. Not much really to say, and it is getting below this low that it had back in late June. So I would imagine we're probably just going to come down, probably at least fill this gap here that we got around 174, if not coming all the way down to the lows around 168. All right, taking a look here at the U.S. 10-year yield, and we continued to push higher this week. We did not take out that high from October, got very close. The high in October was 4.335, and the high that we put in on Thursday was 4.328, so we are close. And then we had a nice little pullback there on Friday. So honestly, this thing looks like it's just kind of getting slowly compressed in here, and I would expect it's probably going to pop this, October high probably this next week. So if that happens, man, watch out, as yields probably will continue to climb, and that's going to continue to put pressure on the stock market, and we're going to continue to see the stock market get pushed lower. 10 and 2 inversion, nice move this week, continuing to push higher, taking out the high that we had back in August. Nice little pullback there on Friday, but yeah, this thing looks like it's probably just starting to move back to the non-inverted area, which once this thing starts to really run up here, that is when we start to see stock market sell-off accelerate. Have to just continue to watch here. It's not like, the market tops when this thing bottoms or anything like that. Once this thing starts to really run up, that's when we start to get a little bit more worried that we're going to see some significant stock market sell-offs. Not much was hiding from the selling that we saw this week. Even bonds, HYG here, yep, dropping pretty good there Tuesday, Wednesday, Thursday, Friday. If you're looking at these candles, I mean, a little bit of a gap down, upper wick retest. Yeah, I mean, just these two daily patterns just set up for continued pain in that bearish direction. So not looking good of a setup there on the HYG. So yeah, we'll see what happens, but HYG hasn't broken down nearly as much as the LQD. The LQD obviously broke down pretty significantly this week, breaking all of these lows that we've had over the past several months, making new yearly lows here on the LQD. And really, I would watch out for a very quick early week retest coming up, and you know what, I would probably just not be looking to buy that. So LQD breaking these lows, and I would just say it's probably going to go back down to that October low area, eventually down around the 199, 98 type level. And yeah, we'll see what happens when we get there. Same kind of deal here with the TLT. Now the TLT's been a lot more bearish than the other two bonds, but breaking down these lows a few weeks back, and you can see it's just getting down to these lows, and it's not bouncing yet. We'll see if it bases out and then it bounces, but I'd imagine it at least does take out this low around 92. All right, the week-over-week options change. We do have quite a bit of puts that were getting bought throughout a lot of the expirations. Basically, every weekly expiration going forward. Even some of the monthlies were getting bought pretty good, except for September 22nd. Not much going on there. Interesting. There were some calls getting bought in January, so that's really about all you need to know. But yeah, a lot of puts getting bought there in October. The sentiment survey came out this Thursday morning, and it dropped off pretty good. It actually dropped off to 35.9% on the bullish side, 30.1% on the bearish side. So the bears are starting to pick up a little bit, and bulls are starting to drop off a little bit more. All right, taking a look here at the Fed Watch tool to see what rate odds are like going forward. September, most likely going to be a hold. Here's what's interesting. November now is looking to be more like a rate hike. We're going to go up to the 550 to 575 type range, which is a little bit higher than what it was last week. Last week, it was around 63% of a hold, with 34% of it being seeing another rate hike, and now we're seeing those odds are a little bit higher, up to the 57% chance of another 25 basis point rate hike. And what's interesting, if you look at December actually has the rate odds come back down to our current level. So are we going to have a rate hike in November and then we're going to have a cut in December, which would be kind of interesting, because as we look forward, January, we still see another hold there, and then March starts to get a little bit more messy, as you know what, we can see a hold or another rate cut. So it'll be interesting to see just kind of how that shapes up. If November we do see another rate hike, I would be kind of surprised, in my opinion. Okay, so this is something that I kind of been keeping track of really since this bear market kind of started. What you can see here, and I know it's kind of messy right now, but let me explain. All these red bars and red lines, red paths, these are all of the from all-time high bear markets that we've gone on. Okay, so that's what you can kind of see here. These are all the bear market paths that we've been on, all the way from late 50s to even COVID is in here. COVID, I believe, is this one right here. And this right here next to it is the 87 crash. You can see just one long line down. That was the 87 crash. This one here, the one that kind of comes out here, this is the 2000 to 2002 bear market. And that's about all you need to know about the bear market. So you can see just kind of all the paths, how long it took for us to kind of have these different paths, and just the patterns that you have while going on bear markets. These green ones here, what's interesting about these green ones is these are the patterns from bear market bottoms to all-time highs. Now what's kind of interesting is I have overlaid both the bear markets from top to bottom, and the bear market then rallies going on to a new bull market. I've overlaid them on top of the points where, you know, whether they topped or bottom. The green, they have overlaid to the bottom here from the October lows, and the red are overlaid to the top that we had back in January of 22. Now here's where things get a little tricky. I've mentioned this before, but if we started to break down the lower end here of the pattern that we're running up, because we've been following the lower end of the pattern of some of the previous bull markets that we have started, then we would literally be in no man's land. This week was kind of the start of that. I'm not going to really say we're in no man's land quite yet, because there was one pattern here where basically last week relative, we were basically kind of pulling back at the same level. So next week, and really the week after, so I'll say the next 2 weeks, really for here the month of August, it is going to be very important for the bulls to see us buy the dip, get moving into that bullish direction, because if we don't and we start to sell down, we will be in no man's land. We will never have seen this kind of scenario before. Why that's important is because we don't know how to plan for it. That's the problem. We don't know how to plan for it. And here's the thing, is if we are still in a bear market, then we are hugely deviated to the upside, and we could continue to see rapid selling come into the stock market. Now, I am still one that thinks that we will come take out this October low that we did put in around the 3,500 on the S&P 500, 350 on the SPY, and we will probably come down and check into this long-term exponential trend line, which is basically this blue line, which if we got there in October, it'd be like around 340 or something like that. If we got there in early of 2024, it'd be like 345. So I'll show you that on the SPY chart here in a sec. But this is a huge risk if you were trying to buy the dip right now, is because we don't know. We don't know. Like if we break down this pattern that we've been on for bullishness, then we will have never seen the market now pull back, break these patterns, and then go hit an all-time high. We would never seen that. So we're about to be in no man's land for a pattern on the stock market we've actually never seen. And if you are wondering what this blue line is, let me show you here on the long term. Basically what it is the long-term exponential trend line. So going back to the 30s when the US government moved away from the gold standard, this is the line that we started to have. That was the normal mean line of the stock market. And you can see sometimes we are below it, sometimes we are above it. But every time that we are above it, we do check and come back to it, just like we were back in 2000. We were hugely deviated to the upside, and it took 2 years for us to come back to it. So it can take quite a while, and it is one of those things. We were hugely deviated up above it, and will we come back to it? So it'd be interesting to see. All right, take a look here at the RSP for the week. Yeah, we just saw continued selling coming in Tuesday, Wednesday, and Thursday. Yeah, not really much else to talk about. That's not too indifferent from most of the major indices. The only kind of bright spot is we did just pull into the 100 and 200 moving average, but we weren't seeing significant buying today on the stock market. Now, that's not to say that maybe we don't come out on Monday and start to see significant buying, but I'm just saying we didn't see very strong buying, convincing buying today, Friday, on the stock market. The DIA, the Dow Jones ETF, this is a pretty solid level to probably buy this as you're kind of coming into a lot of these previous highs after we broke out in late July, and now we're just kind of pulling back into that level. So not a bad spot to probably be taking a shot here. And yeah, we could probably continue to pull back a little bit lower, but if we break these two lows from late June, early July, I think we'll probably see the DIA continue to fall off here too. The IWM, yep, just same thing here. Very accelerated selling that actually came in on Tuesday, Wednesday, Thursday. Nice gap down, got bought up. Pretty much just like everything else. You definitely want to see it test into this zone right here around the 179 level. Kind of like how it did back over here, but the issue is once you break this low, now you're starting to set up like lower lows, that kind of thing. So you don't, I don't know what to think here on the IWM. It's kind of a messy, but you don't want to see it consolidate here, go sideways, and then break down, because it's just going to build up pressure and then have enough momentum to just break through all these levels. So not really sure how kind of to play the IWM right now. The Qs is kind of in no man's land. It's not quite interacting with that 100 moving average. And we're seeing a lot of the tech stocks really kind of roll over. Apple has broken through its 100 moving average and is on its way to the 200. Microsoft is slowly grinding through its 100. So if the big dogs are breaking through some major levels, it's hard to say that the major indices aren't going to do the same thing. I would just be a little bit cautious here. And even Meta, which has been a big time runner this year, has been rolling over here recently. Even Alphabet got caught in the selling later on this week. Amazon as well. And even Tesla. Tesla got annihilated this week. They were down over 10% on the week. SPY, the S&P 500 ETF trust. I kind of mentioned this before. Watch out when it comes into this zone. This is going to be the really tough zone, 430. I think once we get through this zone, I think the selling is going to be on. I don't think 4,200 on the SPX, 420 on the SPY. I don't think it's going to hold. I think this is the zone. This is the zone to be absolutely trying to be bullish on. And if we get through it, I think we'll probably come down to 4,200, 420. You're probably going to get a quick bounce, and then I think it'll be sold off. I think people will flip. I think people will go bearish, and it'll be game on. I think it'll be game on to that bearish direction. So if you're trying to be bullish here on the market, you're wanting to be bullish, you're going to be bullish on this zone right here. Now, taking a look at that longer term kind of zone or line that we were just kind of looking at on the SPX a little bit ago, we do have this blue line down here, and this is where we do have some pockets, right? We do have a pretty large pocket here, and you can see these weekly candles. These are pretty large breakdowns here that we're seeing. And, if you want to see something, go check out that monthly there on the SPY. We already have a bearish engulfing over July, and we're not even done with August. So it'd be interesting if August we can get below 430. Man, that will set up really bad for September and October. But we were looking at it today on the live stream, and basically we got about 20% down to those October lows, and then from those October lows down to that blue line. And this would be like by the end of October. That'd be like another 5%. So basically we get down to those October lows. It's just start buying, right? It's just start buying. But there's a lot to move here, and I still think this blue line matters. I think the blue line matters. I think the only reason why we actually did rally on the market is because, well, there was two stimuluses passed last year, right? It was the CHIPS Act, and it was that other act like the Inflation Protection Act or whatever it was, some stupid thing where they introduced money into the market, into the economy, and it's like supposed to reduce inflation. What a joke. But that brings me to this poll question. If we continue to sell off, I'm just kind of curious to see your guys' opinion. When do you think the recent selling stops and the market, the S&P 500, bounces? Now, this is all kind of related to the SPY levels: SPY 430, SPY 410, SPY 390, SPY 370, SPY 350. And basically the difference between 370 and 350 would be, do you think we get down to like 360 but we don't break the lows? Or do you think we get down to 360 and we break the lows? So if you don't think we break the lows, but we kind of get down into that zone, 370. If you think we will break the October lows, you're going to take 350. So I'm just kind of curious to see what zone matters to everybody. What is the important level? What is the one we will bounce off? And I really think if we break through that 430, I think it's going to be game on. So I'll leave the link to that poll question down in the description or the pinned comment, or you can go over to the channel page in the community tab and it will be there. So have a great weekend. Alrighty. Take care, Outfronters.